CNBC senior markets commentator Mike Santoli here to break down the crucial moments of this trading day. Plus, Josh Brown of Ritholtz is back with us. We'll get his reaction to the rallies in CrowdStrike and Pfizer, and Courtney Reagan on the stocks taking down the retail space today. Mike Santoli, we had a lot to get through today, and we're going to do it, and it looks like we're going to finish green across the board, and I'll put the Russell in that mix too.
It is green, so we're picking up about half of what was lost yesterday in the S&P, so it certainly shows you that there hasn't been some kind of a selling spiral unleashed by a down 1% day, and I'm a little bit, I think it's a nuanced setup right now, which is it's a bull market. The market's done absolutely nothing to make you doubt the overall trend. It didn't even pull back to its 20-day average. There's 400 stocks making new 52-week highs today on the New York and the NASDAQ. It's all to the good. I just still do think, though, that it has made sense that we flatten out here. And yesterday's low was basically where we reached first on, let's say the 12th or 13th of February. So it goes back 3 weeks. And that's the kind of thing I think is probably better, letting the market cool off and go from boil to simmer, because otherwise it feels as if it could get a little bit too jumpy. Again, I might be too cautious there because, with all the benign macro and yields coming down and the Fed going to likely cut within a few months, it's hard to find the thing that's going to be the trigger. But for now, I still do think that you'd love to see sentiment cool off and maybe get more of a gut check.
And even when we were, spending much of our time, Mike, saying, well, the Fed's not going to cut when we initially wanted, and they're not going to cut how much we initially wanted. Powell gave you, the chair, of course, gave you a reminder today. He reminded the bulls, but we're still going to cut.
Well, but that's right, because the broad framework hasn't changed, right? And this is a committee, and the committee is on the record with a consensus outlook, even if it's not developed in that way, which says 5 3/8 on the Fed funds rate is extraordinarily high relative to the rate of inflation, and our models say that's restricted. Now, we could say the economy's not acting like it's being restrained very much. That's pretty much true, but the job market has softened. It's less tight than it was. Housing has taken its lumps, and you still do see these things like non-mortgage debt rising to record levels. And, in other words, there are reasons for them to be on alert for not being too late. And he said the risks are balanced and we can deal with that. And I agree with Josh, though, about we're not so finely tuned to when it happens or how many cuts we
get.
Not anymore. It's just about having the potential for easing in reserve.
CrowdStrike doesn't care. It's up 10% today on the back of those earnings, Mr. CrowdStrike investor.
Yeah, I was going to say, actually, the first rate cut is actually a better thing to have to look forward to than to actually get.
I joke, it's the carrot you hang out in front of the donkey to keep it moving.
Yeah, it's like that distance between two things where you never actually reach because you keep getting cut in half. That's
asymptote.
It's asymptotic if and when we get that first rate cut. Let's push it into 25. CrowdStrike is a banger. I don't know, what else? What is left to say? People say, oh, it's 80 times earnings. Yeah, earnings growth is 87%. What should it be? What should it be? So this is the gift that keeps on giving. Just when you think the momentum simply has to slow, not only does the cybersecurity pie keep growing, but CrowdStrike finds a way to take share from other players. Because not every cybersecurity company that reported this quarter had a nice reaction. CrowdStrike's reaction stands out. It's not up as much right now as it was last night after the close. No big deal. The stock looks fantastic. It is the second largest market cap in the Russell 1000. That's not currently an S&P 500 component. I think they need one more quarter of something to qualify or to get in. I think that's a fait accompli. It's something that I would look for to happen over the course of the summer.
You want to talk about Pfizer, too, which you said was one of the best stocks to buy in this market. You said that just the other day on the halftime report, and it's up a lot today, I think. Let's take a look at Pfizer as you talk about it.
I got lucky. I think it was added to, on the timing, I think it was added to the Schwab dividend ETF, which is a monstrously large ETF. It's in a lot of Schwab model portfolios for wealth management, for retail, et cetera. So I think the addition to that is the reason behind today's big jump. I certainly wasn't counting on it or expecting it, but of course I'll take it.
Well, I'm
not giving it back.
You got to be lucky to be good, right? Sometimes they work.
But the fact remains, this company did a huge acquisition. The fruits of that acquisition will not be coming in calendar 2024. You have to have the vision to understand This is not the first near-death experience that Pfizer has faced from a drug expiration standpoint, and it won't be the last. But they are set up to revamp the portfolio, get away from the COVID stuff, and move more toward oncology, which is a growth market, and some other areas.
By the way,
so
did I see
it's an investment.
that people attributing Morgan Stanley being down almost 4% today because it did not get into that ETF?
You and I read the same tweet.
Is it true?
I'm running with it. You have different standards than I have.
No, I mean, I'm asking the question here.
Did Morgan Stanley not make or get bounced out of the ETF?
Or that there was anticipation that it might go in or something. Let's not get into it. But it is interesting that Morgan Stanley's down 3.5%, 4%. Nothing else in the group.
I can't find another reason. So
right.
All right, we'll go with that. Courtney Reagan's watching retail today, and some of these stocks that are not having a great day, Court.
Yeah, Scott, there's a number of retail stocks tumbling, but like usual, there's a lot of nuance as to why. So Foot Locker shares are down a staggering 32%. The Athletic retailer's results actually bettered expectations, but it says it now expects a 2-year delay in achieving its previous earnings and margin potential that it laid out in its March 2023 Investor Day. Abercrombie again put up a strong quarter above expectations, among, if not the strongest results for retailers several quarters in a row. But shares have run pretty far up as a result. So today's downward move, likely some profit taking, and Nordstrom too beat consensus for earnings and revenue, but its outlook disappointed. Shares down something like 16%. Its rack business turning in much stronger sales than its full line department store business. So that also tells you that consumers are really focused on looking for those value conscious kind of items. Scott, back over to you.
All right, Court, appreciate that very much. Courtney Reagan, Josh Brown, we have about 90 seconds to go. Give me something on Uber, which I've been watching the last couple of days. It hasn't looked all that great, down 3% or so for the week thus far. Just one of those stocks that was up an awful lot, and there's a little bit being trimmed off of it.
Yeah, I mean, this is a stock
biggest holding. I bring it up for that.
It's my biggest holding. It's a stock that's had a huge run going into the earnings. The earnings confirmed that it deserved that run, but like all other tech growth stocks, even though it's an industrial, the question is, well, what have you done for me lately, or what's next? And we'll see. But I'm not going anywhere. I'm sticking with Uber. I think it's a $100 stock. It's just a matter of time. But I do think they have one of the best CEOs in all of tech right now. This is a guy that literally took a carcass of a failed startup that had limped past the finish line of going public. They had nothing going for them, and this guy figured out all of the moving pieces: what to get rid of, what to keep, what to double down on. Survived the pandemic, survived the post-pandemic, and so I want to bet on him in the future.
So to recap, today was green in the markets. We made back about half of what we lost yesterday, which is good. There's about 400 stocks making new 52-week highs today. That's just insane. The Fed Chair Jerome Powell spoke. He said that we'll likely get cuts this year, which is good news. Josh Brown owns CrowdStrike. He says this stock is a banger with 87% earnings growth. He really likes them. He recently added Pfizer, and they just got added to the Schwab ETF, which is really good news. They gave them the biggest day since the last couple of months. He says they are set up for a lot of growth. And finally, Josh Brown's biggest holding is Uber. He said earnings confirmed the rally was deserved. He said this is a $100 stock and that they have the best CEO in all of tech. I hope you guys enjoyed the video. Hit the like button and subscribe. Catch you in the next one.